Welcome back to XRP On Moon, the channel where we break down the biggest moves, hidden signals, and future-shaping developments around XRP that most people are still completely blind to. Today's topic is not just another update, it's a reality check. Because the truth is harsh, uncomfortable, and something most investors don't want to hear. 99% of people won't win XRP's biggest wealth transfer, and if you're not careful, you might fall into that majority without even realizing it. Let's start with a powerful question. Why do massive wealth transfers always leave the majority behind? History gives us the answer. Whether it was the early days of the internet, Bitcoin in 2011, or tech stocks before they exploded, the pattern is always the same. People hear about the opportunity, they get excited, but they enter too late, exit too early, or simply don't understand what they're holding. And that's exactly what's happening right now with XRP. Most people think wealth is created by luck. But in reality, wealth is transferred from the impatient to the patient, from the uninformed to the informed, and from the emotional to the disciplined. XRP is not just another cryptocurrency, it's positioned at the center of a potential global financial shift. But here's the catch. Just owning XRP is not enough. Timing, mindset, and conviction will determine who actually benefits when the real move happens. Right now, the majority of retail investors are distracted. They're chasing meme coins, reacting to short-term price swings, and constantly looking for quick profits. Meanwhile, XRP is quietly building a foundation that most people don't fully understand. This is where the divide begins. The difference between those who study the fundamentals and those who follow the hype. The uncomfortable truth is that many people who currently hold XRP will still lose. Not because XRP fails, but because they will sell too early. Imagine holding an asset for years, going through ups and downs, and then finally selling right before the real breakout. It happens more often than you think. Fear, doubt, and external noise push people out of their positions just before the biggest moves. And then there's the opposite problem. Some people will never take profits. They'll ride the wave all the way up, and then all the way back down, because they don't have a strategy. They don't understand market cycles. They're driven by emotions, not a plan. Winning in XRP's wealth transfer is not just about holding. It's about knowing when to hold, when to scale out, and when to stay calm while others panic. Let's talk about mindset, because this is where 99% of people fail before the game even begins. Most investors are wired for short-term gratification. They want results fast. They want confirmation. They want certainty. But XRP's biggest opportunity lies in uncertainty, in holding when things look unclear, in trusting the long-term vision while the market tests your patience. There's also a psychological trap that almost everyone falls into: the need for validation. People wait for the news, for influencers, for price confirmation before they believe in something. But by the time everyone agrees that XRP is a winning asset, the biggest gains may already be gone. Early conviction always looks like doubt to the majority, and that's why so few people capitalize on it. Another critical factor is information asymmetry. Not everyone is seeing the same picture. While retail investors focus on price charts, institutions are looking at utility, liquidity solutions, and global financial infrastructure. XRP operates in a space that goes far beyond simple trading. It's about cross-border payments, banking integration, and real-world use cases. Those who understand this are playing a completely different game. So when we say 99% of people won't win, it's not a random number. It's a reflection of behavior. It's about how people react under pressure, how they handle uncertainty, and whether they have the discipline to stick to a long-term vision. Because when the real wealth transfer begins, it won't be obvious. It won't come with a clear signal saying, this is your moment. It will be chaotic, fast-moving, and emotionally intense. And that's exactly why most people will miss it. But here's the good news. You're here, you're paying attention, and you're starting to understand the game at a deeper level. That already puts you ahead of the majority. The question now is, what will you do with this awareness? One of the biggest reasons people fail during major wealth transfers like this comes down to a simple but dangerous habit. They follow the crowd. It sounds harmless, but in financial markets, the crowd is almost always late. By the time the majority becomes confident, the smart money has already positioned itself. And when it comes to XRP, this pattern is already unfolding in real time. Think about how most people approach investing. They wait for headlines, for hype, for confirmation that something is safe. But wealth is not built in comfort zones. XRP's potential lies in its utility and long-term positioning, not in short-term excitement. Yet most people treat it like a quick trade instead of a strategic asset. That mindset alone is enough to push them into the losing majority. Another critical mistake is overexposure to noise. Social media, price predictions, daily volatility, these things create emotional instability. One day XRP is going to the moon, the next day it's dead. This constant flip in sentiment confuses investors and weakens their conviction. And when conviction is weak, it doesn't take much for fear to take over. A small dip, a negative headline, or a delay in progress, and suddenly people start doubting everything. This is exactly how people get shaken out before the real move. Not because the asset failed, but because their belief wasn't strong enough to withstand pressure. The market is designed to test you. It creates uncertainty on purpose. It moves slowly when people expect speed, and moves fast when people feel unprepared. If you don't understand this, you become easy to manipulate. Then there's the issue of unrealistic expectations. Many investors come into XRP expecting instant returns. They see past examples of massive gains and assume it will happen overnight. But what they don't see is the time, patience, and psychological endurance required to stay in the game long enough to benefit. When reality doesn't match their expectations, frustration sets in, and frustration leads to poor decisions. Some will sell out of boredom, others will sell out of fear, and many will sell because they simply can't handle the uncertainty anymore. This is how the majority slowly exits their positions, quietly, emotionally, and at the worst possible time. Another overlooked factor is lack of strategy. Most people enter the market with no clear plan. They don't know their entry reasoning, they don't have profit targets, and they don't understand risk management. They're reacting instead of executing. And when the market becomes volatile, which it always does, they're completely unprepared. In a true wealth transfer event, volatility is not a bug, it's a feature. Prices don't move in straight lines. There are sharp corrections, sudden spikes, and unpredictable swings. These movements are designed to shake out weak hands. If your only plan is to hold and hope, you're already at a disadvantage. You need clarity, you need structure, you need a mindset that is stronger than the market's emotional pressure. Let's also talk about timing, because this is where many people get it completely wrong. They try to time the market perfectly, buying at the absolute bottom and selling at the absolute top. But perfection is an illusion. In reality, successful investors focus on positioning, not perfection. They understand that being early is uncomfortable and being late is expensive. With XRP, the real opportunity is not in catching every move, it's in understanding the bigger picture. This includes regulatory developments, institutional interest, and global adoption trends. These factors don't play out in days or weeks. They unfold over months and years. And if you're only focused on short-term price action, you're missing the entire story. There's also a deeper psychological layer that most people ignore: the fear of being wrong. This fear causes hesitation. It makes people second-guess their decisions. It pushes them to wait for confirmation instead of acting on conviction. But in a wealth transfer scenario, hesitation can be costly. Opportunities don't wait for perfect clarity. They reward those who are prepared to act with calculated confidence. There's discipline, or the lack of it. Discipline is what separates the 1% from the 99%. It's the ability to stick to your plan when emotions are high. It's the strength to hold when others panic, and the wisdom to take profits when others get greedy. Without discipline, even the best opportunity can turn into a loss. The reality is, XRP's biggest wealth transfer is not just a financial event. It's a psychological test. It challenges your patience, your belief system, and your ability to think independently. Most people won't pass this test, not because they can't, but because they don't prepare themselves for what's coming. And that's where the real opportunity lies, not just in owning XRP, but in becoming the type of investor who can actually benefit from it. Now let's shift the perspective and look at what truly separates the 1% from everyone else. How smart money actually operates during a wealth transfer. Because if you only understand retail behavior, you're already one step behind. The real advantage comes from recognizing patterns that institutions and experienced investors follow, especially in assets like XRP that are deeply connected to long-term financial infrastructure. Smart money doesn't chase hype. It positions early, often when sentiment is low and uncertainty is high. This is the phase where most retail investors feel uncomfortable, confused, or even disinterested. Price action is slow, news is mixed, and nothing seems exciting. But this is exactly where accumulation happens, quietly, patiently, and without attention. In the case of XRP, this accumulation phase has been one of the most misunderstood periods. While retail investors were distracted by faster-moving assets, XRP continued building its underlying value narrative, focused on utility, cross-border efficiency, and integration into financial systems. Smart money pays attention to these fundamentals, not just price movements. Another key difference is that smart money thinks in terms of probabilities, not certainties. They don't need to be right all the time. They just need to be positioned correctly when the odds shift in their favor. This is a completely different mindset from retail investors, who often wait for guarantees before making a move. But by the time something feels guaranteed, the opportunity has already matured. Let's talk about phases, because every major wealth transfer follows a structure. First comes accumulation. slow, quiet, and often boring. Then comes expansion, where price starts moving and attention slowly builds. After that, you get acceleration. This is where media coverage increases, influencers start talking, and retail begins to flood in. And finally, there's distribution, where smart money starts exiting while the majority is just getting started. Most people enter during the acceleration phase. It feels exciting, validated, and safe because everyone is talking about it. But this is also where risk increases significantly. Prices are already elevated, emotions are high, and decisions become impulsive. This is why so many people end up buying near the top and holding through the downturn. With XRP, understanding which phase you're in is critical. If you're still treating it like a short-term trade, you're likely reacting to the expansion and acceleration phases without realizing it. But if you're analyzing the broader context, regulatory clarity, institutional involvement, and real-world adoption, you begin to see a much bigger picture forming. Smart money also manages liquidity differently. They don't go all in at once, and they don't exit all at once either. They scale in and scale out. This allows them to reduce risk while maximizing opportunity. Retail investors, on the other hand, tend to act in extremes, either fully invested or completely out. This lack of flexibility often leads to missed opportunities and unnecessary losses. Another powerful concept is emotional neutrality. Smart money is not emotionally attached to price movements. They don't panic during dips or get overly excited during pumps. They operate based on data, positioning, and long-term vision. This emotional control gives them a massive edge, especially during volatile periods. Retail investors often do the opposite. They panic sell during corrections and FOMO buy during rallies. This creates a cycle where they consistently buy high and sell low, without even realizing it. And in a market like XRP, where volatility can be intense, this behavior becomes even more costly. Let's also address information flow. By the time news reaches the majority, it's usually already priced in. Smart money reacts to developments before they become headlines. They analyze trends, partnerships, and structural changes long before they become mainstream topics. This doesn't mean they have secret information. It means they interpret available information differently. For example, while most people focus on daily price charts, smart money looks at long-term positioning. They ask questions like, where is this asset headed in the next 3 to 5 years? What role could it play in the global financial system? How does it compare to existing solutions? These are the questions that shape real investment decisions, not short-term price predictions. There's also a patience factor that cannot be ignored. Smart money is willing to wait. Not days, not weeks, but months and even years if necessary. They understand that true wealth transfers don't happen instantly. They unfold over time, with multiple phases and shifts along the way. This patience allows them to stay grounded while others become restless. And this is where most people lose the game. They simply can't wait. They need constant movement, constant validation, constant results. When those don't come, they start looking elsewhere. They abandon their position, only to watch it move later without them. So when we talk about XRP's biggest wealth transfer, it's not just about the asset, it's about behavior. It's about whether you can think like smart money instead of reacting like the crowd. It's about recognizing the phases, controlling your emotions, and staying focused on the bigger picture. Because the reality is, the opportunity is not hidden. The signals are there. The patterns are repeating. But only those who understand how to read them, and more importantly, how to act on them, will actually benefit. As this potential wealth transfer begins to accelerate, the difference between those who win and those who get left behind will come down to one critical skill: the ability to read signals without getting trapped by illusions. Because in markets like XRP, not everything that looks bullish is truly opportunity, and not everything that looks bearish is actually danger. Let's start with one of the most important signals: sudden attention. When XRP starts trending everywhere, when mainstream conversations increase, when social media becomes flooded with price predictions and hype, that's not the beginning of the opportunity. That's often a sign you're already deep into the cycle. Attention is a lagging indicator, not a leading one. By the time everyone is talking about XRP, smart money has already been positioned for a long time. This is where most people make a critical mistake. They confuse visibility with value. Just because something is everywhere doesn't mean it's early. In fact, the more obvious it becomes, the closer you may be to a turning point. This doesn't mean XRP won't go higher. It means risk is increasing and strategy becomes even more important. Another key signal to watch is volatility expansion. When price movements become faster and more aggressive, it creates excitement, but also danger. Large green candles attract buyers, while sudden red drops shake them out. This back-and-forth action is designed to test your emotional stability. If you're reacting to every move, you're already losing control. During these phases, you'll notice something interesting. Price will move in ways that don't make sense at first. Positive developments might not immediately push the price up, and negative news might not bring it down as expected. This is because the market is forward-looking. It prices in expectations, not just events. And if you're only reacting to headlines, you'll always be one step behind. Let's talk about false breakouts, because they are one of the biggest traps during wealth transfer events. XRP might break a key level, create excitement, and then suddenly reverse. This is where many retail investors enter, right at the moment of maximum optimism, only to face immediate losses. These traps are not random. They are part of how liquidity is created and transferred. Understanding this changes everything. Instead of chasing moves, you start waiting for confirmation. Instead of reacting emotionally, you begin to observe patterns. You realize that not every breakout is real and not every dip is a reason to panic. This shift in perspective is what separates reactive investors from strategic ones. Another powerful signal is market sentiment extremes. When people become overly confident, believing that XRP can only go up, that's usually when caution is needed. And when fear dominates, when people start questioning everything and expecting collapse, that's often where opportunity begins to reappear. The market moves against the majority, not with it. This is why emotional control becomes your greatest asset. You need to stay grounded when others are losing balance. You need to remain patient when others are rushing, because during the most critical moments, clarity is rare, and those who have it hold a massive advantage. Now let's focus on something even deeper: timing exits. Most people are obsessed with buying at the right time, but very few think seriously about how they will exit. And this is where the real wealth transfer happens, not in the buying, but in the selling. If XRP enters a strong upward phase, prices could move faster than most expect. This creates euphoria. It creates the feeling that this time is different, that it will keep going forever. And this is exactly when discipline is tested the most. Because taking profits in a rising market feels wrong, but it's often the smartest move. Smart investors don't try to sell at the exact top. They scale out. They take profits in stages. This allows them to secure gains while still staying in the game. Retail investors, on the other hand, often wait for the perfect moment and end up missing it completely. Another warning sign to watch is over-leverage. As excitement builds, more people start taking bigger risks. They use leverage to amplify gains, not realizing it also amplifies losses. In volatile conditions, this becomes extremely dangerous. A single sharp move can wipe out positions completely. And during wealth transfer events, these sharp moves are very common. Discipline, patience, and risk management. These are not just buzzwords. They are survival tools. Without them, even the best opportunity can turn into a loss. XRP might present one of the biggest financial opportunities of this cycle, but only for those who are prepared to handle it correctly. And here's the final piece: self-awareness. You need to understand your own behavior. How do you react under pressure? Do you panic easily? Do you get overly excited during rallies? Do you follow the crowd or think independently? These questions matter more than any price prediction, because at the end of the day, the market doesn't just test your strategy, it tests you. As XRP moves closer to what many believe could be a defining moment, the signals will become louder, the movements sharper, and the emotions stronger. And in that environment, only those who are calm, prepared, and disciplined will be able to navigate it successfully. Now let's bring everything together, because this is where theory meets reality. XRP's biggest wealth transfer, if it plays out the way many anticipate, won't look like a straight line to success. It will be messy, emotional, unpredictable, and fast. There will be moments where it feels like everything is finally happening, and moments where it feels like it's all falling apart. And within that chaos, the real separation between the 1% and the 99% will happen. The people who win in this scenario are not necessarily the smartest or the luckiest. They're the ones who are prepared. Prepared mentally, strategically, and emotionally. Because when the market starts moving aggressively, you won't have time to figure things out. Decisions will need to be made quickly, and if you don't already have a plan, you'll default to emotion. Let's paint a realistic picture. XRP begins gaining momentum. Price starts climbing steadily. At first, only a small group notices. Then gradually, more attention builds. News starts picking it up. Social media begins buzzing. Analysts start making bold predictions. This is where excitement grows, but also where discipline starts getting tested. As the price accelerates, you'll see extreme opinions on both sides. Some will say it's just getting started and will go infinitely higher. Others will call it overvalued and predict a crash. This noise will intensify as volatility increases. And right in the middle of this, you'll need to stay focused on your own plan. Because here's the truth: there is no perfect exit. No one consistently sells the exact top. The goal is not perfection, it's execution. If you've already defined your targets, your strategy, and your risk tolerance, then all you need to do is follow through. But if you're relying on feelings in the moment, you'll hesitate. And hesitation in fast markets can cost you everything. One of the most powerful mindset shifts you can make is this. Stop thinking in terms of all or nothing. You don't need to go all in or all out. You can move in layers. You can secure profits gradually. You can reduce risk while still maintaining exposure. This approach removes pressure and allows you to think clearly, even when the market is moving rapidly. Another important factor is understanding that you don't need to catch the entire move to win. Even capturing a portion of a major trend can be life-changing if managed correctly. But most people miss this because they're chasing extremes. They want the absolute bottom and the absolute top, and in doing so, they end up with neither. Let's also address something that many avoid. Regret. No matter what you do, there will be moments where you feel like you could have done better. Maybe you sold too early. Maybe you held too long. Maybe you missed an entry. This is part of the game. The goal is not to eliminate regret. It's to minimize its impact by making decisions based on logic, not emotion. Because when everything settles, when the hype fades, and when the cycle completes, only one thing will matter. Did you follow your plan? If the answer is yes, then you've already done better than the majority. And this brings us back to the core message of this entire discussion. Why 99% of people won't win. It's not because the opportunity isn't real. It's because the discipline required to capitalize on it is rare. It's because most people react instead of prepare. They follow instead of think. They hope instead of plan. But if you've made it this far, if you've understood the phases, the signals, the mindset, and the strategy, then you're already positioning yourself differently. You're no longer just holding XRP, you're approaching it with awareness. And that awareness is what creates opportunity. Now, before we close, it's important to say this clearly. This entire discussion is for informational and educational purposes only. This is not financial advice. Markets are unpredictable, and cryptocurrencies like XRP are highly volatile. Every investment decision carries risk, and you should always do your own research. Consider your financial situation, and if needed, consult with a qualified financial advisor before making any decisions. Because at the end of the day, the responsibility is yours. The opportunity may be massive, the potential may be real, but execution, that's entirely up to you. And that's exactly why only a small percentage will truly win.